Now, the questions are still coming in about inflation, so we continue our live virtual conversation with financial advisor Sean Toll. One person tells us, Sean, I'm a new retiree. How can I protect my nest egg in this bear market?
As a new retiree, we do run a risk of losing money early on in retirement. It can be very harmful in the future. So if you're a new retiree, I would have my assets in a fairly risk-averse portfolio, maybe some more bonds. You might want to hold a little bit more cash right now. Annuities, if you don't have them, are good tools. Not all of your assets by any means, but you can use those to protect some of your assets from these down markets. So you really want to have a conservative approach. I think right now, problem is we're living in a lot longer. You may be in retirement for 30 years. We're going to have to see some growth in there. But right now, especially early on in retirement, being a little bit safe is a good move.
All right. Now we hear from Donna. She says she's 68, not retired. She's self-employed and on a low income. She says she's watching her small IRA going down and is not sure what to do. So what is your advice for Donna?
Well, unfortunately, Donna, as you're watching it go down, but we're already seeing it go down now. So if you were to take your portfolio or your IRA and sell what you have now and put it into cash or something safe, you've basically insured your losses. I would say identify a good plan, identify one that is going to work for you in the future, identify what your expenses are, and make sure these come together for you when you get into retirement.
A topic that came into us was about cryptocurrency, saying they're hearing a lot about it. Is this something we should consider investing in, and what are the pros and cons?
I only see cons in crypto. I've had a lot of clients ask about crypto over the past 2 years, and I have advised all of them to avoid it. You're doing nothing more than buying something that has absolutely no value and hoping somebody is going to pay you a higher price for it at a later date. We've seen a lot of millionaires made by doing that, but unfortunately, those millionaires sold their Bitcoin to the current holders, and they're losing a lot of money. I would avoid it. I would not touch it. It maybe have this blockchain technology might work for our world in the future, but right now, I would not touch any type of cryptocurrency.
All right, Sean, we'd like to get your opinion on a comment President Biden just made in an interview with the Associated Press. He said this about the recession, quote, "It's not inevitable. We're in a stronger position than any other nation in the world to overcome this inflation." What are your thoughts on that?
Nothing's inevitable. There are no absolutes in life, but the Fed right now has gone from a very easy policy to one that is turning very restrictive. They are very nervous about what inflation is going to do. And if you read the notes, they are probably more comfortable with having a recession versus having super high inflation. So we saw a 3/4 basis point jump the other day. I expect we'll probably see 50 basis points to 75 basis points again. So I do see that we are going to slow down and we may enter a recession. I don't think it's going to be a horrendous one. And hopefully this Fed can orchestrate what they call a soft landing, which would be a mild recession.
All right, and we have a very specific question from Robert. He says he's older than 70 and a half, and therefore he has to take an annual minimum required distribution from his IRA. With the market lower than earlier in the year and possibly lower than at the end of the year, would this be a beneficial time for him to request the distribution?
Quick clarification, he can wait till age 72 to take that required minimum distribution. So if he doesn't want to take money out, that's okay. There might be a good opportunity, though, right now to take that money out. It's based on how they calculate what your RMDs are. It's always based on the prior year values. If he can take it out and needs the money, that's fine. If he doesn't, he can actually wait until 72 to do so.
All right, we're going to take a quick time out. Sean, we appreciate your financial expertise. We have more of it coming your way right after this break.